So here's something interesting. Why are South Africa's biggest retailers and insurance companies suddenly trying to become banks? Look, over the past few years, something unusual has been happening in the South African retail landscape. Shoprite, the largest grocer in the country, now has over 4 million banking customers. Pepkor, Africa's biggest seller of clothing and mobile phones, they just received regulatory approval to launch their own bank across 2,500 stores. Pick n Pay, they're reporting 60% year-on-year growth in cash deposits at their tills. Even Old Mutual, they've poured 4 billion rand into unbanked, starting from scratch. And even Sanlam, they're entering a joint venture with TymeBank that's worth 750 million rand just as a start. This isn't a coincidence. It's actually a coordinated pivot across the retail sector and the insurance sector actually. And the numbers kind of explain why. Traditional retail is pretty brutal. Their operating margins are 3 to 5%. Banking and fintech in Africa, their return on equity is 17 to 19%. When you understand that gap, the strategic pivot becomes almost impossible not to see. These retailers aren't diversifying out of curiosity. They're actually chasing profit margins that are 4 to 5 times what they're selling when you think about things like bread and uniforms. The thing here is that South Africa is witnessing the emergence of a new kind of financial institution, one that is built on shop floors rather than on banking halls, and loyalty programs rather than credit scores are going to be the way that daily customers interact rather than just monthly statements. This video is going to attempt to answer why this shift is happening, who the major players are going to be, what strategies they're deploying, and what it means for banks like Capitec, the traditional banks, and the roughly 1/6 of South Africans who remain unbanked or underserved, I guess. Take a closer look at this. Traditional banks spend billions building and maintaining branch networks. Retailers already have that. For instance, Pep operates 2,500 stores, often in rural and peri-urban areas, as well as townships, where traditional banks have minimal presence. Shoprite, 2,800 retail locations across South Africa. These aren't just shops anymore. They're send and receive points for cash, deposit terminals, and soon, probably fully integrated banking branches. For millions of South Africans, it's simply easier to deposit money or make a payment at a till while buying bread than to travel to a dedicated bank branch. The convenience factor is pretty enormous. And the retailers, they know this. Bloomberg reported in March 2026 that Pepkor was actively recruiting senior banking leaders to drive a shift to what they were calling fully integrated transactional banking models across their entire network. They're looking at ex-Investec and independent directors to help them get this expertise in. When you bring in someone who ran South Africa's largest bank for like 8 years or so, you're not just trying out, you're pretty much executing. Another thing that becomes clear when you examine this closely is the data advantage. When you swipe your loyalty card at a Shoprite, let's say, they know what's in the basket. When you bank with them, they know when your salary lands, what bills you pay, how much you have left at the end of the month, and whether you're likely to need credit before payday. Shoprite has 31 million Xtra Savings members, and they recorded 1.2 billion customer visits last year. That's not customer databasing. That's a credit bureau in waiting, kind of. The numbers tell us an interesting story also here. Shoprite CEO Peter Engelbrecht has publicly stated that the company will enter the banking world more aggressively with plans to launch what he calls the only zero-cost bank account in the country. I wonder. The account already kind of exists, quietly serving millions of customers without significant marketing. Now they're preparing to compete directly. The bigger picture is so interesting when you understand that about 1/6 of South Africans have no bank account or are underserved by traditional lenders. This is the new battleground. Capitec built its entire empire on this foundation. They were a credit lender. Their primary customer base has monthly incomes ranging from 5,000 to 40,000. They're South Africa's largest bank by customer numbers and the most popular among grant recipients and lower income South Africans. That's key. But Shoprite's money market account was specifically designed for exactly this demographic, including people who receive government grants. Pepkor's target market is explicitly low-income customers who have no account or are underserved by traditional lenders. Then you look at the insurers. Bank, they're targeting customers that are earning 5,000 to 80,000 rand per month, directly overlapping with Capitec's bread and butter. Everyone's coming for Capitec. Research from Swiss Re shows that Capitec may be capturing 36% of all new funeral insurance sales as well. That is in fact Old Mutual's lunch, and the unbanked isn't just about entering the banking market, it's also about creating a moat and protecting their insurance business from a competitor that's moving into their territory. Can you see it? When we take a different view though, the transaction cost savings alone justify a lot of this investment. Every time a customer swipes a traditional bank card at a retail till, the retailer pays interchange and settlement fees to the bank. By moving customers onto their own payment ecosystems, whether closed loop cards or QR payments, retailers can save millions, probably even billions collectively annually. Revenue at Pepkor's fintech unit rose 31% to 16.6 billion rand in September of 2025, accounting for 17% of the total sales that the company was bringing in. Their retail credit book helped drive a lot of this revenue in the financial services division, which was up 48% to 2.4 billion rand in just one quarter. The best angle to see this is from a purely business perspective. If you're already interacting with customers daily, already processing their payments, and already holding their data, why share the profits with a bank? We've got to look at the competitive landscape also a little bit more closely. Shoprite operates a fully fledged bank account with over 4 million customers, built on the foundation of its money market account. They're partnering with people like Absa and Standard Bank to offer up to 60% cashback rewards on things like purchases, then fusing retail savings with traditional banking without needing a full banking license upfront. Pepkor received regulatory approval in 2025, and they're building what they've codenamed a plusb. There's another loyalty play that's here that looks at the underlying strategy. Shoprite has made transactions within the group of companies free for money market customers. Once your salary lands in a Shoprite account, once your transfers and bill payments happened at their counter, once your credit comes from their books, why would you shop anywhere else? Loyalty. That's what they want. People might change where they buy their clothes, but they rarely change where they keep their money. Pick n Pay feels that their stores have become everyday financial touchpoints for millions of South Africans. That actually is true. Look, South Africa is becoming a multi-banked society where customers use their retail accounts for daily transactions and salary deposits, thus fragmenting the market that traditional banks once dominated. It's going to be interesting. The question isn't whether retailers can become banks. 4 million Shoprite customers and 16 billion plus rand in Pepkor's fintech revenue. That already says that answer is yes, they are banks. The question is whether the traditional players can adapt quickly enough, or whether the checkout counter will quietly become the bank counter, one transaction at a time. The till has always been where money changes hands. Perhaps it was only a matter of time before it became where money lives. Thank you for watching this video right up until this point. I hope that it was just as interesting for you to watch as it was for us to make for you. Maybe check out one of these other videos and hopefully they'll be just as interesting as this one. Cheers.